Hello, fellow traders. 'Tis I, the rumpled one. January the 2nd, the year 2018. Happy New Year. I hope everybody had a safe and happy New Year. So we're going to start the new year off today. And I was trying to decide what should I talk about. I received a really nice email from a trader. Said he's been following my videos and he's learned a lot, and he actually had a really hot win streak and it scared him. So he decided to back off and see what's going on. But I really appreciate, hearing those kind words, reading those kind words to start off the new year. That was nice. So what I decided was something I did way back in 2009. All you need to know about trading. And we talk about this, all the disclaimers. You need to know about trading. It's real simple. Price either goes up or down. I was talking to another trader on the phone yesterday, and I was laughing at these people that talk about price moving sideways. I go, the market isn't that chart that you see in front of you. I mean, if this was the olden days and there was a chalkboard and every time the price changed, the guy would erase the number and write the new number. If you sat there for an hour and price didn't change, would you say price was moving sideways? I think if you told somebody, yeah, price is moving sideways, they'd look at you like you were crazy and start laughing. They go, price hasn't moved. What do you mean? It's the same as it was an hour ago. It's not moving sideways. And along that lines, no one knows what will happen next. You put your trade on and that's it. You don't know what's going to happen next. I mean, Mark Douglas said that a lot. And that's just the facts. You don't know what's going to happen next. Price is either going to go up or down. Back to the first thing. We just don't know. Then the old wise, keep your losses small and let your winners run. Around New Year's, you probably get a lot of these emails that tell you a lot of these old wise sayings. Sort of like the serenity prayer. And in trading, you have to realize what you can control. You have to have the wisdom to know what you can control and focus on that. Know what you can't control and just, pay attention to what it's doing. And you have to have, the wisdom to know the difference. So that goes back to here. You don't know what's going to happen next, and you can only control your loss size. The winners, you really can't control how far the market's going to run in your favor. But when you see it running against you, you can cut that quick. And something that we talk about now, or at least I show the screen on a daily basis, especially for the new people or people that are new to my videos, so they can freeze frame it, take a screenshot. But position size equals risk divided by stop loss, or stop loss equals risk divided by position size. Simple algebra. But that's it. You need to know that. So when people ask, well, where's the stop loss, you say, well, what's your risk? And then you either determine your position size, let your position size determine the stop loss, or where you're going to put the stop loss on the chart, determine your position size. So that will keep your losses within your risk limit. Once again, keeping your losses small. Now, I like to joke about squigglies. And if you're new, this is the first time you're watching my video, I like to, make fun of the squiggly line indicators. Okay? Because there's so many people who get caught up in, the MACD crossed zero, or the RSI or stochastics are oversold and we've got confirmation on 3 time frames, blah, blah, blah. But the thing is, and so that's why you entered the trade. Well, the reason you entered has no bearing on the outcome. It really doesn't, because once again, no one knows what will happen next. Okay? So you have to realize that just because you got the weekly open cross, one of the trades I like to do, doesn't mean it's going to be a winner. It could hit that weekly open, I enter, and it stops and turns around and reverses for 100 pips. It can happen. It's just that simple. So the reason I entered that trade because of the weekly, it has no bearing on the outcome. And that's just, some of the basics. Once again, you can control the size of your loss. That's the skill. But you can't control the size of your win. That's the luck part. Because see, when you win, it's luck. Now, a lot of people take exception to that, but let's define our terms. If you can't control the outcome of an event and it goes in your favor, fortune smiles upon you, that is luck. It's just that simple. You roll the dice, you get a 7 on the first roll, that was luck. Okay? It's just that simple. You buy, Bitcoin back when it was $100, a coin, and now it's, 13,000, 15,000, and you made $1 million or whatever. That was luck. You can't control that. You enter a trade on the dollar yen, and it jumps up, spikes 100 pips, and you punch out. Yeah, you didn't control that. Once again, that was luck. And that being said, if it spikes real fast, you need to know when to pick up your chips and cash them in, because you don't want to see a 100 pip profit turn into a 50 pip profit, turn into a 25 pip profit, turn into a 12 pip profit, turn into a 6, turn into a 3, and you're wishing, hoping it's going back up. No. Pick up your chips, cash them in. There'll always be another trade. Maybe I should probably put that here. There will always be another trade. Okay, another opportunity. Now, expectancy. A lot of people talk about that. The probability of a win times the average win size minus the probability of a loss times the average loss size. Now, one thing you have to know about trading, there are no probabilities. All we have are statistical results. Probability deals with the future, statistics deals with the past. The math is the same, but it's a big difference. And that's something that you'll hear me harp on over and over, because I try to talk about reality, talk about truth, talk about facts, talk about evidence. Okay? You don't know. The dice, yes, you know the probability, because the probabilities don't change in dice. If you have fair dice, they haven't been shaved or weighted, then you know what the probability is for each number. But with trading, you don't know the probability. You don't know that you have a 60% chance of winning. You can't say you have a 60% probability of winning. No, you could say you have a statistical edge of 60% over if you take a rat zone trade. But once again, that's statistics. Okay, that's looking in the past. Has no bearing on what's going to happen. So, and you can't control the probabilities of winning or losing. Like I said, you can't control that. You can't control your average win size. The only part of the equation you can control is your average loss size. It's just that simple. Okay? Moving on, price action. Herein. Price makes new highs or lows, and then they reverse. It happens every day. That's where the rat trade came from. It's real simple. It makes highs, it makes lows. You look at today's and yesterday's high, it will either make a new high or it won't, make a new low or it won't. So what happened here? It made a new low, and what did it do? It reversed. That's what price does. It made a new high for the day and it reversed. So, what is price action? It will either break out of the high, low, or both of the previous bar, or it won't. That's it. That's price action. You can't reduce it any further, and anything else complicates the issue. So, that's just the simple, basic price action. That's it. That's all you need to know about price action. Anything else is just somebody pontificating and trying to make themselves sound smart and or important. Entering a trade. You decide to wait and do not enter. You trade a breakout or crossover. You trade a reversal. Those are your only options. Once again, trading is simple. This is simple. Somebody can sit there and give you a 50-page book, okay? But bottom line is, once you distill it down to its essence, you get to the crux of the issue, this is what it comes to, okay? Now, for those of you who don't know me, my background is computer science and logic, analysis. And this is what I do. This is what I've been doing for decades. I'm old. I'm going to be 62 this year, okay? The point is that, when you analyze something, you get to the crux, the core. There's only usually going to be 1, 2, or 3 things. That's it. I mean, anything else is just complicated. And you see, that's all you need to know about trading. Now, once again, there's the money and risk management screen. Okay, we need to pick a pair. I'm trying to decide, should we pick a pair and stick with it for the entire month? That's what I'm wondering. Let's see, what looks interesting? Well, even though I don't trade it, I think most people trade the euro. Maybe we should do that. Let me know if we should change every week or if we should pick a pair and stick with it for the entire month. I mean, pairs I trade, I stick with for months and months and months. That way I don't miss any of the runs, or at least I reduce the chance while I'm looking at, say if I'm looking at the dollar CAD and I've been trading a euro and I'm over here and then all of a sudden this thing runs and I miss the entry, I'll be kicking myself. Don't want to do that. So here, looking at the weekly open, close minus the open, we got 41 pips to the good. Okay. Look at the daily. You can see there's that breakout right there across the daily high. Let's look at the, oh wow, we've got some, look at all these pairs starting off the week in 100 pip ranges. Look at that. And look at some of these reverse, look at some of these moves here from the open to the high. Nice moves. But, getting into the methods, we got the buy zone. Okay, maybe if you took that trigger, you took a hit. But I mean, if you look here, and that wouldn't have been a smart trade. But here we got a buy zone, took some heat, buy zone, boom. Money in your pocket, pips in your portfolio. Trading off the rat zone right here. Out of the zone, red rat reversal, took some heat. You were able to probably pocket 10 to 20 pips depending on where you popped out there. Pivot point, you look for the fade. There it is. Price action. Don't want to beat it into the ground, but put in a high. We're trading across these horizontal lines, or we're trading off the candles. Right there, boom. You see what happens. You see here, red, green, cut over, rat reversal, probably good for 10 pips. Oh, my phone rang, but it's kind of funny, fellow traders. I'm going to have to wrap this up because I'm running out of time. The famous 5 lines from yesterday. wick zone trade, holo zone trade.